learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming into September 18th, 2020, and the Fed just announced more stress tests for the banks. So that is important. We had Powell yesterday. We saw the market react today. I said yesterday the market didn't like it. It really didn't today. It kind of bounced up a little bit, then sold off pretty weak, but we have to talk about why. We kind of got some signals from the market. However, after hours, we got news from the Fed. We have a specific event to look at. I'm going to explain all of that, what it is. I mean, it's going to help us coming into the weekend. However, we are still in that volatile range. Again, the cuckening of September. So anything can happen. Tomorrow is a quad witching, so it could be very exciting. I mean, it usually isn't, but this time might be a little different. So we have a lot to talk about. I got the plays, I got the keys, everything else we're looking at tomorrow, and kind of a little bit early of an end of the year prediction, but I'll probably make another video on that. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's that first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life. And yes, if you want to play a retro throwback game show game while watching the stock market and trading and want a chance to win a pair of Yeezys so you could be like Mustafa, then comment below. Tomorrow, we're going to be playing a game on stream. We are going to pick 3 contestants, and it's based on the top comments of this video. So make a comment below. I don't know what it is. Give a suggestion of even the game. I don't even know. But the top 3 liked comments, we are going to let you on tomorrow for a chance to win some moo-moos. So go through there, vote on some people. Thank you all for participating. Shout out to Colton Chattadonia. And don't forget the most important thing you need to do. Post your watches below. Let us know what you're looking at. Got any plays, comments, remixes, anything? Post them below and source that info. Shout out to chat again. So right off the bat, first thing is market didn't like the lack of clarity from Powell. So I talked about this a lot. I told you guys I was kind of confused on this, but based on the reaction we saw today, again, the range was a lot lower. It looked a lot scarier in the morning, but we did, in fact, gap down a pretty decent amount, and then things went up, ultimately to test lows again, and then kind of end up here. But we will see how tomorrow plays out again with the quad witching. But for the most part, it seems like I wasn't the only one. A lot of people were kind of focused on the fact that the Fed was saying, this is what we're going to do, this is where we're going to be, but not really giving a clear plan of action. So market prices may dictate that. The market may respond. But however, now there is still that bank news. So that came after hours. And this even relates to what we talked about with even the end of September with the Fed and the banks. But I think this is kind of important. This was from the Fed. Again, shortly after the market, they said that they're releasing the hypothetical scenarios for the second round of bank stress tests. Now, one thing that makes this important, one thing that makes this event, they have never, ever in the history of ever done 2 stress tests on the banks in a single year. It's usually a once-a-year type of thing. So this is the first time the Fed is doing that. And now this does kind of give a little bit of guidance. Maybe this is what Powell is trying to communicate to the markets. He thinks it's clear. Maybe it's not. But we will shortly find out. Again, I want to even see how bank stocks react both tomorrow. We want to see how the overall market reacts then coming into next week as we start to wrap up September, get into the final weeks. We will see what the market is saying. But as far as this second round of stress tests and what they're looking to do, they're modeling 2 scenarios. The first scenario is severely adverse, where unemployment would peak around 12.5% by the end of 2021 next year, and then declining to about 7.5%. And then the alternate scenario, that's what they call alternate severe, would be if unemployment went to 11% by the end of 2020 this year, and then stays elevated and only declines to 9% by the end of the whole entire scenario. And again, that's why yesterday and the whole Fed was important, because these scenarios and these models, these are all the way till 2023. Anything they're modeling is for about 3 years, if you really think about that. So put the time frame in perspective. So that is important. We will see how the market reacts. I think this is just to tie everything into the fact that what would have moved the markets today, we are coming off of Powell. So that being said, said, I would pair this with kind of what would allow the markets to move, but I think there's going to be a lot of money tied up waiting on this decision. It relates to the Fed, what they're thinking, how they're feeling. Again, this powerful Powell guidance, but that bank decision on the 30th, honestly, I mean, when we get to the plays, I mean, shout out to Lettuce, but we are going to look at the bank stocks. I've been saying this, but I'm really, really liking this now because what's going to happen here on the 30th, it is going to be a rip or a dip, I would say, because the Fed is going to determine if the banks could pay out dividends or not. So remember, they've been halted, dividends and buybacks. So that's going to mean now on the 30th, we're going to find out, okay, banks have to keep holding their dividends or banks can now pay dividends and do buybacks. That will cause the bank stocks to either run up a lot or they will actually kind of get devalued now, because that's really changing the long-term value and how they're going to be able to support the stock. So putting this all together, the Fed, all of that, I think that's going to be important coming into these weeks. We will see how other stuff and news comes into play, but it seems like we don't really have any other events until I think the election heats up and we start to hear more from the Fed, or unless the market or any of those other signals react. So oil bounced up today. Watch some of that stuff. But like I said in the past, you will see it when there is really a big move, and we're kind of waiting. It's a really weird wait and see approach right now, but I don't think we will have to wait too long. Again, we are getting into some interesting months here with October right around the corner. But as far as tomorrow, it is going to be a quad witching. We've talked about this a lot on this channel. A lot of people bring it up. There's going to be a lot of activity on the quad witching. Pretty much 4 different index classes are expiring at the same time, like futures, options, and 2 other ones I can't remember. But some people think it creates a lot of volatility, but it just means there's going to be a lot of volume. There may be a lot of movement at certain levels, but usually it doesn't actually correlate with like big volatility, big ranges, and we've seen some pretty tight ranges this week. So watch for any of those ranges. However, I would say who knows? It seems like this is interesting. Again, we're entering into October, so I think it's just an interesting time on the clock, as well as now the Fed and some of this stuff that's even coming out now. I think it's kind of heating up, but that is pretty much it. So let us get into the plays. So right off the bat, like I said, I really like this. I mean, we'll go for some of the other banks. We have those Goldman Sachs puts, but JP Morgan both ways. So why JP Morgan? Again, what I just said with the banks, that whole theory with the end of the month, I think we play a strangle on both sides. I think it could be a pretty big move. So why JP Morgan? Because they have been one of the banks throughout their latest earnings. They've announced that they want to increase buybacks and that they've kind of, have a desire to do some of this stuff they weren't allowed to do and that shareholders would like. So I think they're going to be good. Goldman Sachs is a second. Then again, Citi has a target on their back. So I might make a few different bank plays, but I want to watch. This one doesn't necessarily mean I'm going to go for it tomorrow. This whole cuckening and whipsaw has been, it's wreaking havoc on option chains and option prices. So got to be careful, but I at least have the idea in mind. So I'm going to watch that. The second play, I will watch this tomorrow. I like it just because it's at like a breakout point and it's volatile and it hasn't got action in a while. So again, as far as the options are concerned, we might be able to get some nice steals on there. But I think the rumor is complete BS. They're saying that by Monday, we're going to hear that the CEO is going to confirm a stock split. I think that's BS just because the company just IPO'd. People bought into that. You saw the stock run up. That was the only piece of news we saw towards the end of the day. So watch that. But again, if it has some news, maybe sell the rumor. Again, tomorrow might be an interesting day for them. They are just at a nice level that I'd like. So I'm going to watch them, not necessarily sold on them. And finally, I made 3 different big plays that we'll go over here, but I meant Apple instead of Amazon. But I got Microsoft, Apple, and Spotify calls. And I may even get a few others next week to kind of set up for a mini bounce. And this is kind of what's going to relate to my end of the year thesis. I need about 2 more weeks. Again, I did this last year. Take this with a grain of salt. We'll see how it plays out. But this is just pretty much off of a general thesis that usually the end of the market, the last 3 months of the market, pretty much reflects the first 3 months of the market. So we've seen that almost year after year. Let me get you on a 5-year chart, but usually that first 3 months kind of categorizes what happens, by the end of the year. So we saw that. We've seen it a lot. So call me superstitious, call it what you want. I think they've done studies on it, but I still think we need a little bit of time. But if we're going to use that as a metric, it looks like we're going to repeat this. So that's why I wanted to set up for some calls, because even with this volatility, I wouldn't be surprised to see a big little mini push upwards. And take advantage of some of the volatility. Again, this whole ride with options, it's killed contracts on both sides. So I see it as the opportunity, but it is going to be a game of wicked hot potato. So be very, very careful. None of this is a recommendation. But as far as those plays, we spent a decent amount of money. The first one I got was 10 of the Microsoft 285 calls for January at $1.36. So that's about $1,300. But why I got them with time, I wanted calls. Again, we've gotten a decent amount of puts, and then I did make a long-term purchase we'll talk about. But I like Microsoft. I keep playing them back and forth. I like that it's a slow mover. I want time. I don't want to try to time it with October, but these are going to appreciate a little bit less, and even then I'm spending a little bit more money to get kind of closer to the money here. I don't want to be near the money and pay too much, but I don't want to be so far out of the money that if there is a mini pop, if it doesn't last too long, I want some protection with time. So don't forget, we also have a lot of those other put plays as well too. So I grabbed a lot of calls today. It's kind of a little hedge here, but I'm kind of also want to take advantage of where we're at with time and premium and all that. So that was the first play. Then I got Spotify. I grabbed 5 of the January 400 calls at $2 a pop. That was about another $1,000 there. And then I got 10 of the Apple March 160 calls, a little closer to the money for $233 each. That's about $2,000. So spent about $4,000 or $5,000 there. And then you guys are going to get really surprised at this one. I made a long-term purchase, and we've owned this stock before for a while, but I grabbed a big amount. I grabbed Walgreens. We had this in the small account. This was like one of our worst holdings, and that's why I wanted to buy it again in the marketplace. Even other people have talked about this being a bad performer, and that's kind of why I like it. But one of the top S&P 100 dividend companies, they pay like a 5% dividend. It's Walgreens, kind of with the pandemic, the pharmacies, all that. You know, there's many reasons, but there's also many reasons not to like them, even just from a pure dollar purchasing power standpoint. A lot of people hold this stock. A lot of people say it's their worst performer. So our biggest position before this was $100. So if I wanted to establish a high paying dividend position, I'd rather buy a stock like Walgreens now when growth is really, really expensive, as opposed to a few years ago and buying when I did buy my growth stocks and chose to pass up on some of these dividend ones. So I think it's a decent point to rotate into. So I grabbed a decent amount, $11,000 worth, and I'm probably going to hold this for a decent amount of time. So we got this on the bigger Robinhood. This is separate from those other long terms, but I like it, and I kind of want to build a little bit around this. So we'll see, and we'll see how it is coming into next month. But you have a long time before the dividend, so you don't necessarily need to hold it. So I may get more, but we'll see. We'll have a lot of time with this. But those were all of the main plays as far as everything else coming into tomorrow. Watch those growth stocks. I'm still in that Snow IPO. Actually, we should go back to that. So we definitely got clapped on that, but we explained it a little bit today. You guys would have seen it wasn't as bad. I mean, damn, it's down 17% now. It was up a little bit. We were down like 10%, but still losing, still holding. Again, we talked about controlling the balance. So I'm pretty much going to ride this out. If it doesn't ever go back up, I will be screwed. But my exit plan is to be able to try to get some free shares. So we'll give this a few days, but I'm not a stranger to holding and don't really want to panic sell too much on it. I mean, I'm not too worried about it. It does suck. However, this is part of our little IPO experiment. So keep note, I'm pretty confident in holding it, but doesn't mean I necessarily like it. I'm more confident in the idea that, well, it will eventually give us some level of opportunity. That could be 1 day, 1 month, 1 year, 1 million years. I don't know. But as far as everything else, watch those. Watch the banks. DraftKings still killing it. Even Penn was going up after hours. I like Starbucks. I want to see how they play out. Again, I wanted to set up a position. And like I was saying, this whole cuckening has created some opportunity. So I want to start eyeing some of these. And then, like we said, Microsoft, but HD and McDonald's, those are the ones I really, really like. We've been watching them. However, the banks and kind of what we see this follow up with the Fed, that is going to be my main focus. Watch the dollar again. Even just what we saw today was just very, very unique. That's why I'm thinking tomorrow could be a little interesting because this isn't really your typical Fed reaction. It seems like things are frozen. So shout out to Elsa. It could be very exciting, but that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to learn how to wait. It's a weapon, baby. Use it to your advantage. If you're weighted, you're grounded. You ain't tossed and turned. You learn how to wait. You don't get clapped. But the goal loves you. I love you. I'm going to see you in the morning. Let's go.